If I were to start a real estate business in 2025, here's exactly how I would do it. My name is Art Morrison III, and I've done over 50 transactions since 2019, and I've helped dozens of clients nationwide close their first real estate deal in 90 days or less. Since I started real estate, we've encountered several different markets, from a pandemic to interest rate hikes to slow market like right now, with interest rates staying high for multiple years at a time and there being way less buyers on the market. So we have a ton of experience since 2019 to now of what kind of real estate deals are market proof. So in this video, I'm going to break down some of my favorite real estate transactions and why I would prioritize these types of transactions in a market like the one we were sitting here in 2025. When we started back in 2019, we were primarily a fix and flip real estate business. We would buy houses, dilapidated houses, fix them up, sell them on the market, and they would sell extremely quick because right when we launched our company, we just went through a global pandemic to where interest rates were historically low in order to spike the economy. So everyone was a qualified buyer and everyone was buying real estate. So if you could be someone with inventory who's selling real estate, you could make a ton of money. As you can imagine, 5 years or 6 years later, we're in the exact opposite real estate market where properties are sitting on the market long because of interest rate hikes as a result of inflation, aka so many people spending money. The government literally had to decrease the value of the dollar so that we stop spending money. So buying houses to fix them up and sell them is not ideal in this market. And to be quite honest, in any market, it is always a high risk business model. So if you're watching this and you're just getting started in real estate, I don't necessarily recommend fixing and flipping unless you have a deal that's just so good and the numbers just make so much sense and it's your first deal and you have an opportunity to make 50 grand, 100 grand from a flip, then sure, do it. I never want to get in the way of anybody making $50,000 to $100,000 on their first transaction, as I did on mine. But if you're serious about actually building a real estate portfolio, then it's really important that you follow these next few steps. Number one, it's important that you constantly have deal flow. The more deal flow you have, the more control you can have over your real estate business. If you're watching this right now and you're relying on wholesalers and realtors to provide you deals, that's okay. But again, realtors are typically dictated by the market and wholesalers are a little less because they're off-market transactions. But at the end of the day, both of these parties are in the business to make money. So they're always going to charge as much as possible for their service or for the deal. When from your perspective, the cheaper you get the deal, the more leverage you're gonna have to be creative and make money in multiple ways that you won't see go up and down through various different markets. One of those ways is becoming a wholesaler or a realtor yourself. If you can create deal flow where you're constantly in contact with homeowners directly, you can negotiate pricing where the pricing is actually going to determine what you do with that property. This way, there's no ceiling to what kind of transactions you can do in any market. So I'll give you an example of what we do here at United Home Relief in our acquisitions department. One of our favorite marketing campaigns is a text message marketing campaign where we send out thousands of texts to homeowners who may be motivated to sell their property. This includes tax delinquencies, pre-foreclosures, vacant properties, out-of-state owners, and sometimes people with high interest rates. So after we reach out to these people, we begin having a candid conversation with them about what their motivation is to sell and how much they're looking to get for their house. Now, first of all, if I was going through a wholesaler or through a realtor, I would not be able to have these conversations in the first place. The wholesaler or realtor would be a gateway between me and the seller. So I can't even really get to the seller's pain point so that I can properly serve them. But then secondly, depending on what their motivation or what they want for the property is going to dictate how I acquire that property, or more importantly, how I make money off of this property or opportunity. So like I said, at United Home Relief, my acquisitions department is directed to find out these pain points and find out how much they want and make an offer based on this. For example, if a seller is motivated by money and they want to get as much money for the property as possible, it's probably not in my best interest to buy it or even to try and wholesale it. Because in order for me to wholesale it, I'm gonna have to charge even more to a buyer to make my fee. And to be quite honest, if I'm buying it, I definitely don't wanna buy something from someone who's trying to get the most money as possible. So in this case, I would simply refer that lead to a licensed agent or broker. I was only able to have this power and control over the deal because I reached out to the seller directly. My company, United Home Relief, makes an extra 6 figures a year just simply referring leads, referring these kinds of deals to real estate agents just because the seller wants more than we are willing to pay. This is a great business model that you can do in any market because real estate agents are always, no matter if it's an up market, a down market, they are always trying to make money. They're always looking for listings. So if you can become someone who's providing leads and providing actual deals, people who actually want to sell, you can provide this to real estate agents as a service. You too can make 6 figures in your first year of real estate just by finding motivated sellers who want to list with an agent. The second thing that my team looks for is, can they get this deal below market value? Can we get this deal cheap enough to where we can make some money on it, but maybe it's more expensive than we would be willing to pay since we have really strict buyer's guidelines. In this case, we would then wholesale the property. If you don't know what wholesaling is, it's when you find a deal off market, meaning no realtor or wholesaler involved, and you negotiate a price, and then you find a cash buyer who can close quickly and fit the seller's needs, but you charge a fee in between. So for example, if I find a deal worth $200,000, but I got it for $100, I can sell it to another investor or buyer for $110. They still got a property for $90,000 less than they would have if they went on the market, but I was able to make $10,000 for this kind of deal. And number 3, this one's obvious. Let's pretend in that same fictitious deal, if I were to get that deal for $80,000, well, this is an extremely cheap home run opportunity. We would obviously buy and keep this property for ourselves, either as a flip or as a rental. Now, even under this option, there's multiple ways we can acquire this property. Let's just pretend that buyer has a mortgage that has a high interest and they can't afford it and they need to get rid of it. This is where you would introduce maybe a subject to opportunity where you take over the mortgage because you know that you can find a tenant who's willing to pay more than that mortgage and you're okay with taking on maybe that high interest rate. Or on the opposite, there's people who have a low interest rate and still just can't get the property sold because of the kind of market that we're in, whether it's this slow market or maybe the pandemic market where there's a lot of competition among buyers. Either way, for whatever reason, subject to is great because you can take over the mortgage and make it maybe a simpler transaction for whoever is selling the property. And as a result, you can obtain that property without having to obtain your own mortgage. You can literally buy houses using none of your own money just by taking over people's mortgage. But again, you wouldn't know this unless you had a direct communication with the seller to determine what exactly their pain point was. Another example that would work really great in 2025 is if someone had their house paid off and they wanted to sell it and they wanted max amount for this house, but for some reason, or for the same reason that everyone's house is not selling, their house is struggling to sell because it's simply a slow market. In this scenario, you can say, hey, well, I can buy your house and I can give you the amount that you want, but I'm going to need you to hold the mortgage, which just means I buy it from you, but instead of me getting a loan from a bank, you're actually gonna loan me the equity in your house. So I'm gonna pay you a mortgage instead of paying a bank. Now, why would someone do this? I already explained, maybe they're struggling to sell their house in the market. And to be honest, when banks loan you money to buy a house, they make a lot of money on interest. If the seller can make that money as well, they may be a happy camper. These few strategies and techniques are what I'm focused on in 2025. And if I had a fresh start, these are what I would prioritize as my primary ways of not only obtaining property, but also just making an earned income in this real estate market. And quite honestly, any real estate market that comes next. Historically, as a company, we were obtaining debt, we were buying houses using hard money loans, and we were using gap funding, which is basically private funding to give us the down payment, closing costs, reserves, and construction deposit to buy the house. And then when we sold it, we would then pay back our hard money lenders and pay back our private lenders. But in a shaky market like this, where things are struggling to sell quickly, I'm not really a fan of taking on all that debt or borrowing all that money just to do real estate, when I know that there's plenty of other ways to make money like the ones I shared with you in this video. So if you're watching this and one of these strategies stand out to you as a way that you can start earning money in real estate or start growing your portfolio, even in this wild 2025 market, a link to my application in the description. All you have to do is fill it out. And if you're qualified, then you'll be able to book a call directly with me so that you and I can get on the call and discuss exactly what strategy works best for you so you can stop hesitating to get started in real estate. Again, I'm Art Morrison III, the CEO and founder of United Home Relief, and I really appreciate you for watching. If this video was valuable, please be sure to like, share, and ultimately subscribe so that you can continue to take in more information and immerse yourself in all this real estate knowledge so that you can close your first deal and start forging a path to wealth. I'll see you on the next video. Peace.